Good morning, everybody. It's Tuesday, August 27th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up a quarter at 386 3/4. November soybeans were up 3 1/4 at 984, and December Chicago wheat was down a penny and a half at 523 1/2. This morning, the USDA announced an export sales announcement of 127,760 metric tons of corn to Mexico for 24. Yesterday afternoon, we had crop conditions for corn dropped 2 percentage points in the good to excellent category, down to 65%. Soybeans came back 67% good to excellent. That was down a point from the previous week. And spring wheat harvest, 51% harvested. That's versus 31% from the previous week. Good morning, guys. It's hot through the upper Midwest today. We've got this little system coming through, heat indices over 100 here in the, like I said, in the upper Midwest area. We'll have to see if that triggers some showers or storms, which would be much needed. But I guess, Dustin, maybe just a few thoughts here this morning as we get rolling, and then we can throw it around the room.
Yeah, I think when I look at things like the Sep-Dec spread, I think it's evident that we are kind of still being impacted by that. 24 3/4 overnight now. We kind of settled on the low again. Any bushel, whether it was delivered last fall and it was continued to roll because the price never got up to a level that was deemed appropriate, even to just the last 2 months, was kind of built into that September contract by now. There's a lot of argument online in the last month that this wasn't possible. There was really not much of a position, but then we had record September open interest as of Friday last week, right? Still on the books. So I do think this was probably something long time in the making, where we're getting that last roll or sell question that is still negatively impacting corn. It's actually positively impacted like things like the what you wouldn't expect, the beans corn ratio. Beans have been supported on new high crush margins. December crush margins hit $1.45, new high for the calendar year yesterday. So, beans are actually starting to kind of gain some favor against corn, despite having some very bearish news in the last month. That report showed a lot more bean acres than we were expecting. And now here we are back above some of these major moving averages on that ratio, beans divided by corn. So I do think that there's a positioning problem in the market, and it's my personal opinion, not necessarily company opinion, but I think that we're due for some sort of first notice day, traditional first notice day sell off into Thursday and rebound after, potentially. It doesn't always work that way. So, take it with a grain of salt, but I just wouldn't be surprised to see that happen.
Yeah, we see a big drawdown in open interest too in corn. We're down another 11,787 from yesterday's session. So 30,000 roughly in the last couple sessions. So I think you are seeing some of that, squaring up, if you will, Dustin, ahead of, first notice day.
Yeah, I think there's a lot of people online that were poo-pooing that this was a possibility. And obviously it seems to be working out exactly that way. Whether you look at the Sep-Dec spread or you look at the price action, time will tell. We'll see what happens going into Friday and next week. But so far, it seems fairly consistent with prior first notice day positioning problems.
It's hard to believe that position is going to keep rolling, right? You're coming into what potentially is a big crop. You got to free up space. I don't know.
Yeah, I think you're right. I think that everyone that has been kind of holding tight to old crop as still having a chance, I think that the wind is out of their sails and they've come to that realization. Again, personal opinion. And it's interesting because, the idea of DP or basis only is all of a sudden lost all favor, right? So it could even have implications for how people perform this fall. They say, there's no way I'm carrying it forward anymore. Whatever the price is, that's what I'm going to take. Perhaps that causes more selling than we otherwise normally would have for fall bushels as well. And it corresponds with what appears to be a record yield crop, which again I think weighs on people to say, well, it makes sense that we're going to be at low prices. But you talk about sustainability. I mean, we're not just experiencing losses in the U.S. We're experiencing losses globally at these prices, and so you can only go far enough down that road before something breaks in the supply chain. And maybe it doesn't break in the first year because the infrastructure is already built. And this happens in any industry, right? The shipping container industry, for example. You build too much inventory and you experience losses on that part until it cleans itself up. Brazilians are definitely not experiencing the same prices they've had. They still have had huge input cost inflation. And that's reflective in bankruptcies, number of claims down there. So we're seeing the same thing to maybe a different degree down south. And so I look out forward to like the DEES 25 corn, DEES 26 corn contract right now, or bean contract, whatever one you want to look at, and say this price does not make sense without some severe cuts in cost production. You have a record short position by managed money funds as well, and you have demand that's actually making money here. So there's a chance that the market has miscalculated what could be the one of the more pressured, most bearish points of the year, where we're just dumping the very last remaining paper contracts of old crop and going into a record harvest new crop, and then trying to forecast out what the next 2 years of prices are going to be on the board. The market might be looking at that and saying, and they're having recency bias problems and not thinking about what are all the things that are going to happen to make sure that demand is still being met with enough supply into 25 and 26. So I don't want to be kind of a perma bull looking all the way out, but I also think there's no way you can look at those and say, well, these make sense for U.S. grower balance sheets or South American grower balance sheets without having some significant financial pain in the future. And then questioning, like, what's going to give? Is it going to be input costs are going to come down? Because that seems to be a harder thing for everything outside of ag, right? To get input costs down for anything non-ag. So how is the ag market going to do it? And it might be as simply as, output got too cheap. We're in the business of risk management, so I don't want to make bold claims that far out. I just want to be extremely cautious about the balance of both sides of the market.
There's a lot there, Justin. What do you get? What
Yeah, no, I don't disagree with much of it. I think, start with the first part, going into first notice day, we've talked about a long time. You're getting paid a small interest rate now to stop September corn, right? So it's the wider that spread gets, the higher the interest rate. You're past full storage of 24 cents. So it's going to find some number that a speculator, commercial, somebody that's willing to take a bet, and earn an interest rate is one to take that position. So that is evident. It's evident that, these commercials, some of these commercials are taking negative equity positions. They've rolled past the point where if they've paid the grower 60%, even 50% in some cases, the grower now owes money to the elevator after fees and rolls. So it's been a debacle, and Dustin made the point of, just the appetite for doing this again. I agree. I think it's going to be very low. It reminds me of these cycles we go through where, something's hot, right? It was accumulators in 2020 was super hot, and everybody loaded up on accumulators and got destroyed. And then that was the devil for a while. And then it was, certain programs, so I think this is one of them, right? It's one of those unintended consequences of taking a large position, a long position, and then not, marking it to market, right? Not realizing the losses until all of a sudden it's like, hey, you owe me money on this grain that you delivered. So I think we are working through that. I think no matter how you look at September corn at 360, it's cheap. If you look at the period from 2014 through 2020, that those kind of really tough years, that 330 to 350 range was kind of the lower end of those bear markets. We had a couple September contracts that briefly touched $3. I think maybe 2 or 3 times in that period. But generally 330, 350 was kind of the low end of the range. So any factor that you look at, we're cheap. Now, can we go cheaper? Absolutely. And if some of these things continue, or bankruptcies in South America, potentially bankruptcies here, cash crunches here, all sorts of different things could certainly push that lower in the short run, call it the next 30 days. First notice day, I'll be really curious to see how we act afterwards. A failed first notice day, then you have to look at, maybe, October 1st type date. So we don't know how, the pain's relatively new, meaning the last, 6 months. September corn's down 50 cents in a month, to put in perspective. That's a huge move after we were perceived already at low prices, right? So the pedal's been pushed down. The boot is on the throat of the global grower right now, and those things can go a little bit longer than you think. Either way, I think we're at a value area. If you fast forward 6 months, I think we're at higher prices. I just don't know where we have to go to first. Yeah, and it's obvious, right? We're the end user. We talked about this yesterday. They're slowly buying. They don't feel the rush. So we're going to overdo it at some point here. We're going to get, that last bad long out of the market. This is a bad trade, right? If you were a speculator, you talked about this in the pits, you knew the guy that had a bad trade, and somebody finally had to come shake him, like, you got to get out, right? That's what's happening right now with the farmer long. So when that's over, I do agree with Dustin. I think, things to look at would be, relative things like soybeans. You talk about Nov 25 soybeans, they're at 1030. If those get to 1050, 1060, somewhere up there, I think there's going to be a switch of acres to things that cost less to produce. Dustin talked about surviving and, these costs of production. I agree that we're in a position now where the global grower is going to have to be, what can I produce for the cheapest amount of money, and how do I get through this phase? And so I think we're going to see things that switch where, hey, you know what? Fertilizer's 10% higher than last year. Not buying it. This application's more, I'm not doing it, because I can't. So those things will naturally, I think, change the balance sheet too on, are we going to put all the types of inputs down globally? There's going to be a grower here or there that has really good ground, has good rain, going to put all the stuff down to get the big bushels. There's going to be a whole lot of others that skimp on things because times are tough. And that will be, that will make its way through global production. It's not immediate though, right? It's going to take some time.
Justin, looking real quickly here, we got a couple minutes. Weather right now for beans have, in your opinion, it's just opinion, if you put kind of the high end of the print down for beans with the forecast that we're looking at?
It's a good question. I would say the bean crop's getting smaller, but I don't know from what level.
Sure.
We could have had a 58. We could. I don't know. It's pod counts are high, potential's there. We're gonna have some really, really good bean crops.
Yeah.
We already have some growers cutting in Tennessee, Kentucky.
Yeah.
They're getting 80 plus bushel beans. So there's gonna be a good bean crop. Yeah, I mean, hot and dry. Obviously, that's people that have missed out. It's going to be taking the edge off the bean crop. I think pro farmers number probably high, but again, I said this yesterday. I'm the worst at predicting national bean yield. I'm really bad at our own, right? Like we got a really good bean crop. I honestly wouldn't surprise me if it's 70 or 100, and that's the honest truth. So, yeah, I mean, you would say it's coming down. I don't know if we know what level. I don't think anybody does. You could say you're taking the edge off corn a little bit too. Beans is the time of year, beans will come off a little more percentage wise. So that's why we're, here we're going to be, I think if you get beans, November beans are $9.85 this morning, get back to $10, you're on a 50-cent rally. So kind of got to put perspective too. What do you want from the market? It's still globally, beans are well oversupplied. So I would think, I hope the market gets excited here and we can get a dollar rally or something. That'd be great. the U.S. industry really needs it.
Oh, very good. Ryland, real quickly here, we'll touch on livestock. It looks like we've digested for the most part that cattle on feed report. What's your thoughts given yesterday's trade?
Yeah, we started a little bit weaker here, but it did not last long. The market faded the response completely. Just kind of felt like you had a lot baked into the market already. We'd already seen kind of lower cash. And I think that was the anticipation, is that there's a potential for a little bit bigger of a supply than we expect. So market faded it, and overall, it just seems like we got some pretty decent new buying on the downside here. We saw, we haven't seen any cash yet, but beef prices did slip a little bit lower. I think the expectation is for a slightly bigger kill this week than the previous week. So I think you've got a little bit better of a sentiment, and we're going into the holidays. So it's just a question of, is the packer going to start to pay up just to get anything bought forward or not? So all eyes are on cash right now. It just hasn't come to fruition. So I think you're still in a really cautious spot just on the calendar. This is typically a time where seasonally the market just, you'll get a nice rally in October, and you just kind of keep going till kind of trend higher till expiration. But we are at historically high price levels. Cash markets are coming down. Like there's a lot of caution here just from the long side of the market. So I think that maybe we get a delayed response to this cattle on feed report down the road, but it seemed like the shorts had kind of beaten it up enough. On the hog side of the market, we made a new high for the move. We hit the 62% retracement level in October. So I think we just brought about a little bit of a natural hedge pressure, maybe some profit taking. Overall, it seemed like, you threw a little bit of negative news at it. You had cash a little bit lower, but generally pretty stable here. But cutout was down pretty significantly. We were down about $4, and bellies and hams kind of led the charge. So I think just the price action was a little bit shady yesterday. Maybe we could get a little bit of technical selling here, but overall, I think everybody wants to be optimistic going into Labor Day, especially on the pork side of things. So we'll see if that cutout can kind of move back up, and if that's going to take futures with it. Otherwise, just kind of feels like you got a little bit more caution just because it's been such a big move. We've made an $8 move here. So I think naturally you're bringing about a lot more hedging here to the market. So I think it is that time just to stay cautious, just in case we start to see things back off from here.
Very good. Appreciate that input there. We certainly appreciate everybody that tunes in on a daily basis. We enjoy putting this on every morning. So if you like the content as much as we like doing it, give us a like or subscribe. Certainly helps us out, opens up the premium content for you, keeps you posted on everything, updated on everything AgYield. So it doesn't cost you anything. Throw us a like or subscribe. We certainly appreciate that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments this morning, guys. It was a good conversation. Hope everybody has a great day. Stay cool out there, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.